In today's video, we're going to focus on the consumer discretionary sector. The consumer discretionary sector has been chopping around this 118 level for much of 2024, 2025, and 2026, and we're right there at that level right now. With this week's candle, we crossed below it, and I'm looking for next week's candle to reclaim this level and continue this chop. Now, XLY's chart leaves a lot to be desired. There's a lot of open gaps here. In fact, if you come into a lot of the top holdings of XLY, take Amazon for example, you should notice something similar. Yes, we've pulled back to the market pulse line. Yes, the market stage is in a market stage of acceleration, but we have this massive gap to the downside. I'm not a fan of gaps. Maybe you're more comfortable trading them than I am, but inside of XLY, my goal was to try and find stocks here where we didn't have this level of gap, but still had some edge. To spare you the time, the one stock that stood out to me is Lowe's. Let me do a deep dive inside of Lowe's in this video. Full disclosure, I have started building up a position. Now, first off, contrast this chart with XLY. In fact, if we open both up side by side, and without getting too fancy here, you should notice right away, XLY, a little bit more choppy, but still more towards its highs in the range, if you will, compared to the lower end of the range. Lowe's is the exact opposite. If you have the personality to buy the dip like I do, then Lowe's is the type of setup which stands out to you. Second thing inside of Lowe's that stands out to me, look at the trend that was leading up to the beginning of this year, and then the trend that became, and we've tried along the way to switch. Right now it feels like Lowe's is trying one more time. We've had a strong bearish trend here, and we can see that with this move straight down. We've fallen into our Fibonacci cluster zone, and we have this entire zone from 200 all the way up to 212.44. Now, if you weren't paying attention, that 200 level already got tagged, and we've made our way above it. I think that station has left behind us. The train might be leaving the station. The market pulse has already tried to switch green once, and we had the market pulse go green a second time with 2 bars ago, or rather yesterday's candle. Now what's interesting is with yesterday's candle, we also had the completion of a 1-2 momentum cross on the back of a fake out. So all of this to me is suggesting that I think Lowe's is gearing up for a trend back up. So while yes, you might see Amazon also bounce, and I think you might even see a nicer bounce here, a stock like Lowe's to me offers greater opportunity because I think the upside is a retest all the way back up to previous highs, and you're getting it at a discount. I think the price of Lowe's right now is what makes it very attractive, along with this Fibonacci cluster zone, which gives you 2 different components working for you. Combine that with growing earnings and a dividend play, I think Lowe's offers a better opportunity than the actual ETF, especially at these levels. What do you think? Do you think I'm buying at the bottom here, maybe cherry picking or buying a falling knife? Or do you think Lowe's offers that better opportunity, especially when you compare it to XLY? One more thing I'll contrast this with is Home Depot's chart. I think Home Depot's chart looks a little bit worse compared to Lowe's, where I would still expect a little bit more downside inside of Home Depot, still feels a little bit more quote-unquote overpriced, versus a Lowe's which still continues to feel a little bit more like a steal to me. In terms of triggers, I'm looking for an entry at either of our long models for the hourly or the daily models. I have the daily models loaded on here, and so far we've had mostly opportunities on the short side. I'm looking for more of the long side setups, which we had before earnings, and that was about the last time we've seen a long side setup. The hourly models have given you many more entries, but in both cases we're looking for a volatility edge, but where price breaches the lower volatility box clouds. And if that happens on the conservative models, especially in that first 30 minutes, I think that's quote-unquote a chef's kiss waiting to happen if you like this setup inside of Lowe's and the Fibonacci symmetry that we're in. Take care, everyone. Good luck trading, and I'll see you in the next update.